Wow, Tesla stock is up 20% on the close yesterday. Congratulations to everyone who bought the dip on Tesla after my video on Sunday. If you're a trader, you can probably already lock in some profits. But if you want to hold this stock long-term or want to know what happens to the stock long-term, this video is for you. In this video, I'm comparing two Wall Street opinions on Tesla stock price that could not be more different. Cathie Wood, the queen of Wall Street, with her price target of over $1,400 for Tesla stock at the moment. And on the other side, Michael J. Burry, known from The Big Short, with a short position and a price target of about $100. For those of you who have no idea who these persons are, I'm going to give you a quick overview about both of them. Cathie Wood is an ETF manager at ARK Invest, that's her own fund. And she runs different ETFs, and the most famous one of them is the ARK-K Innovation ETF, where her biggest position has always been Tesla. Also in other ETFs of her, like the Autonomous ETF fund, Tesla is one of the biggest holdings.
Associated with one stock in particular, and that is Tesla, because you made a lot of waves by attaching a $4,000 price target to the shares at one point.
Yes.
This means that you are obviously very bullish on Tesla and you do hold it in the funds. Is that correct? And if so, is it just a buy and hold, hope it pans out for the next 20 or 25 years? Or is it something different in the way that you approach this particular holding in Tesla?
It is our largest position, but before I go into that, our conviction has increased in the last year or so.
But until the beginning of 2020, Cathie was basically always laughed out by Wall Street. And with her interviews on CNBC, she was basically always that crazy woman with that crazy price target for Tesla stock for $4,000. Guess what? Tesla hit that price target. Now we think, no, Tesla didn't hit $4,000. Yeah, it did technically, because there was a 5-to-1 stock split in August 2020. So if you take $4,000 and divide it by 5, that's $800, and Tesla hit $800 and more last year. ARK Invest even increased their price target for Tesla last year to over $7,000 per share. However, this is not split adjusted, so divided by 5, so you get $1,400 per share. This is ARK Invest's current price target. Their bull case is even higher, their base case is lower. But Cathie also announced that she will update her price target in the next 1 to 2 weeks. And based on her last Tesla trades that we can see here, we all know that this price target will probably not be lowered, but definitely be increased. Okay, this was a quick overview about Cathie. Now let's head over to the other side of the fence to Michael Burry. Before he ran his hedge fund, Sion Capital Management, he was actually a doctor, but quit that job and opened the fund in the year 2000. He funded his hedge fund by some inheritance money and from friends, and he quickly managed to get extraordinary returns in his first years of the fund. He shorted overvalued stocks in the tech bubble of 2001, and while the S&P 500 declined 11%, he made 55% that year. But also as the stock market rebounds in 2003, he managed to get nearly double the return of the S&P 500 in that year. Then he analyzed the US mortgage market, and this is where his famous trade of shorting the US housing market began. In early as 2004, he recognized that the US housing bubble would eventually collapse and started buying these credit default swaps. If you haven't seen The Big Short, watch it, it's a great movie. The first 2 to 3 years, he suffered massive losses because the bubble would just not collapse, and he had to make continuous payments to the banks who sold him the credit default swaps. But then eventually, we all know the housing market collapsed, and he made over $700 million of profit for his investors and over $100 million for himself. From the year 2000 to 2008, his fund made over 480% in profits. After reopening his fund in 2013, he said he would just focus on one commodity, and that's water, because he said, yeah, you cannot take away water, so I'm focusing on that, we'll trade that. However, the years later, he also invested again in large cap stocks. And in 2019, he said there was another bubble in the stock market because so many people were only passively investing in ETFs, and that this could eventually collapse if there is a little crash and all people sell eventually their ETFs, and then it just gets into like a circle and the market would collapse because all the people are invested passively. In 2020, his biggest investments were Alphabet and Facebook. Now to his short position on Tesla. He initiated that short position in early December, and as we can see on the chart, he probably suffered some serious losses in between that and we say early January, end of January. But we know he always was a little bit ahead of time of his predictions. For example, in the housing market, he also started shorting 2 years or 3 years before that, and then it eventually happened. And as we know, also Tesla had a serious bad month of February, declining 30 to 40%. But when we look on the chart, Burry is probably only breaking even right now and has probably suffered again on Monday as Tesla stock increased by 20%. In a popular tweet to Elon Musk in early December, he said, "So, Elon Musk, yes, I'm short Tesla, but some free advice for a good guy. Seriously? Issue 25 to 50% of your shares at the current ridiculous price. That's not dilution." And beneath that, he compared Tesla to all the other automakers in a table, comparing the total revenue, the market cap, and their earnings, which should state out that Tesla is highly overvalued. Now, all this argumentation makes total sense if you see Tesla solely as a car maker. Tesla sells less cars, Tesla has less revenue, and Tesla has a much, much higher market cap than all the other automakers. So eventually, what would happen? That Tesla either collapses and gets to the valuation of the other automakers, or that all the other automakers get to the same valuation as Tesla. The latter would probably not happen, so he thinks eventually Tesla has to crash. So let's look again on the other side of the fence. What does Cathie Wood says to this? Cathie Wood basically thinks, and already thought years before now, that Tesla is not only a car maker. She even thinks that making cars for Tesla is only basically a tool to get where they really want to go. As you see on this table on arkinvest.com, she has different kind of scenarios that can play out for Tesla. We can already see she divides this table in no autonomous and autonomous. So that tells us she thinks autonomous, like the full self-driving feature, if Tesla really manages as one of the first companies to integrate full self-driving into the cars, that this would be an absolute game changer for its valuation. And then Tesla is not a car company anymore, but much more a software company. And software companies, due to higher growth rates and higher profit margins, and will be easier to scale, and Tesla could even, for example, then rent out or make a subscription for this autopilot or the full self-driving features for other automakers if they are not able to provide this feature for their customers. This is what all flows into the valuation of ARK Invest. But let's have a look. Her worst case scenario is that Tesla goes bankrupt and then the stock price is $0. Then we see, okay, she divides it in, can Tesla lower costs or build factories efficiently? And she has then here price targets from $300 to up to $3,400. All these price targets, by the way, you have to divide by 5 because they're still pre-split, as I already told before. So let's have a look at her highest price target with no autonomous. So Tesla cannot launch its autonomous network, and her probability for this is 28%, and a price target of now split adjusted $680. So that would be about Tesla's today price. So that means Tesla really has to ramp up production everywhere. Everything has to go as planned, and the other automakers cannot have too much market share of the EV market. That's really high conviction for Tesla. And I'm not that sure if Tesla even will continue to have this market share. Of course, the overall EV market will grow exponentially. Even from last year to this year, it grew over 120%. And even if Tesla's market share declines in this growing market, they can still sell way more cars over the years. So we see it all comes down to autonomous. And Tesla is the company with the most miles collected. Every Tesla that goes around and drives with autopilot at the moment collects data for Tesla, which they can then use to make autopilot or full self-driving feature even better. And let's hear what Cathie has to say about that.
Cathie, great to see you, and what a tremendous year it's been for you. You now have over $50 billion in assets under management, and your flagship ARK Innovation Fund's up nearly 20% this year alone. But I've got to start with your biggest holding. It's Tesla. In the ARK Innovation Fund, it's also in the Next Gen Internet Fund, it's also in the Technology and Robotics Fund that you run. How do you feel about Tesla's price now, and are you still adding to your position?
Yes. Well, as you know, we report our trades every day, and you will see that we have been adding to Tesla. Our confidence in Tesla has grown as we've done research on what ride sharing potentially could add. It could limit the risk significantly. It's a much more profitable business than electric vehicles. And we do think, even though I think there's some debate at Tesla whether or not they should launch a human-driven ride-hailing network, it would be a very good bridge, we think, to their autonomous strategy, and we think they will decide to do that. I don't think anyone has in their models anything for ride sharing. And then as time goes on and we learn about their artificial intelligence expertise, the 30 billion miles they've collected of real world driving data, no one comes close, not even, I think Google might be at 30 million compared to 30 billion. And we know that in the AI world, and autonomous is AI, that the company with the most data and the best quality data will win. So we're pretty excited about autonomous, and the probability of success in autonomous, we believe, is going up. And therefore, our price target will probably follow at some point.
So her bet is obviously on full self-driving. So in this prediction in her 2020 report on Tesla, she thinks that Tesla has about a 12% chance that it will be an autonomous car company, which means that her price target would then be way higher, of $15,200. That would be then around $3,000 split adjusted. Even if Tesla's market share for EVs declines and they cannot ramp up 100% efficiently, it would still be a great buying opportunity at the moment. However, she even extends this case to a price target of $22,000 by 2024, with a probability still of 12%. That's the golden goose, so that Tesla launches autonomous network, that everything goes right. Like we see at the moment, the factories are being built in Berlin, Texas, India, and other countries. That Tesla, with their vertical integration, that means they do everything themselves, like Apple, for example, they design and produce their own chips for the iPhones because chips from other manufacturers are too slow for the iPhones. Tesla manufactures their own AI chips, and experts say they are years ahead of the competition already for these chips. And yeah, of course, launch their autonomous network. So a price target of $22,000 sounds pretty juicy. Let me know in the comments what you think. Are you on Michael Burry's side and think this is all a big bubble, Tesla will never make it to autonomy? Or are you on Cathie's side, who is probably gonna raise their Tesla price target even more in the next 1 to 2 weeks? Also, in recent years, it had not been a good idea to bet against Elon Musk. Basically, all short sellers lost money betting against Tesla in the last year and a half, because also all his other ventures are pretty successful. SpaceX is successfully launching rockets, and he has absolutely no problem to raise money for this company. And also his past companies like PayPal were pretty successful. So in conclusion right now, there's obviously a lot of hope baked into Tesla's stock price at the moment. Tesla's stock price at the moment, and the potential to go even higher in next years, is mostly based on the hope that autonomous driving will be solved by Tesla and Elon Musk. I myself already have driven over 1,200 kilometers with a Tesla Model 3. You can check out that video too. And we have used autopilot a lot. We have used it probably 60% of the time on highways, on larger streets, and it worked out pretty good. However, of course, we can definitely not call it autonomous driving yet. So if Tesla doesn't manage to get to full autonomy, Tesla's stock price is overvalued. However, by the time they announce they have full autonomy, the stock price will be probably already 3 or 5 times higher than now. So what you're doing when you buy Tesla stock is you're betting on Elon Musk and his team. And Tesla really employs some of the best autonomous driving human capitals that you can find, probably. Guys, I cannot tell you how excited I am to get news on Tesla, autonomous driving, electric vehicles. And I think if one person or one company is to solve autonomous driving, it will be Elon Musk and Tesla. Elon Musk is just one of the brightest minds in our generation right now, and probably one of the smartest people on earth. And most of his ventures were absolutely successful. And over the last 10 years, his company went through a lot of struggle, and he always made it out, and his company didn't go bankrupt. So I think if Tesla and Elon Musk don't make it to full self-driving, none other car company will make it. And Elon Musk also said in a recent tweet that he will stay with Tesla for a long period of time, which is also a very good sign that he is not tired yet and will still continue to innovate. On the other side, we have Michael Burry, and he was also pretty successful in his career. He predicted two bubbles, the one in 2001, the internet bubble, and in 2008, the crash of the US housing. And don't get me wrong, I am long Tesla, but I can see Tesla going still more down in the next years, because I think it will take a few more years to really solve autonomous driving. I mean, I would be happy if they solve it next quarter and it's really extraordinary and has no problems. But even if they publish it and then one car gets destroyed and has bad news, it still could hurt Tesla stock. But what I would do in this case is just average down, because the more Tesla stock declines in the direction of Michael Burry's stock price of $100, the more it gets to be a buy if you think that Tesla will solve autonomous driving. And what I would recommend you, if you have a large Tesla position already in your portfolio and you are worried about that this could halve or even get 60% down or 90% decline in the next years, but you don't want to sell any stock, just maybe buy some out of the money put options on Tesla and make money on the way down that you then can use again to buy more Tesla stock. So guys, I hope you found this video insightful and helpful. Please let me know in the comments what you will do, on which side of the fence you are standing, and see you in the next video. Bye bye.